Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, the 10th of February of 2022, and markets are moving. There's a plenty of economic data to discuss, and we're going to get right to it. Thanks for watching. So we started here at Blanke Schein Wealth Management super early in the morning. This morning it was at 3:30 in the morning. My time, 6:30 Eastern time, I was preparing for Fox Business, Mornings with Maria. So that link below, you can watch it. I encourage you to do so because it was our latest thinking as we would position, given the CPI data that was going to be released later in the day. Well, here's where we are later in the day, just a couple hours later, and I'm here with you filming this because it's the most important data point that we've seen in quite some time. It's the January release of the CPI, and ultimately it came in hotter than expected. What that means is we know there's inflation. I said that in Fox Business earlier. There's inflation at the gas pump, inflation at the grocery store. We know this. And there's a way to position for it accordingly. So we're not worried about how we position portfolios. That ultimately helps us in our playbook. At the same time, it puts the Federal Reserve on notice. Now, the most recent report is right now, the Federal Reserve's hot January or hot inflation may mean the Federal Reserve might have to boost rates faster. Well, we know that the Fed's been behind the curve. If you've watched and followed along, I've been discussing this for quite some time. That being said, whether the Fed does 50 basis points in the March meeting or even 25 basis as predicted, odds on favorite went to 50 this morning. The futures changed that they're going to raise the Federal Reserve. So we don't know if it's going to be 25 basis points or even 50 basis points for the Fed in March when they ultimately start raising interest rates. I mean, this has been the most telegraphed, forecasted interest rate hike that we've seen in quite some time by the Federal Reserve. One thing we know is that the Federal Reserve doesn't want to overdo it, but they are way behind the curve right now, so they have to go, and the question is 50, 25, who knows? Only they know, and I think they're even data dependent because we're still getting a lot of data that's coming through. The inflationary numbers are really concerning. So that means that the Fed has to step in, raise interest rates, slow down the economy a little bit, but we have a baseline economy that's still growing. We have earnings that aren't growing as much, but they're still growing, and that's important. And I discussed there's companies out there that we can find through in a market environment like this, right, where they will thrive. They'll pass on the end inflationary inputs to the consumer. And we've seen that in a lot of these earnings reports. But the Federal Reserve will have 8 more meetings, or including the March meeting, and they're going to be, I would probably believe, we believe they're going to be data dependent because inflation will temper, it will tame. You can't have 7.5% and continue that rate. In fact, just statistically, it's going to roll off. So we're not going to see a huge deceleration, but we will see some of those, like used car market, that's not going to continue to go up like it has. And if it does, then there's a bigger problem. But the Federal Reserve in the back end, we believe, is to be on notice. We have to pay attention to that they don't overdo it. That's our biggest fear, is that the fear earlier was, okay, if and when the Fed was going to get in the game and start raising rates. Well, we know that that's going to be the case. It's a foregone conclusion. Now, the next question is, when is too much? And then I basically am saying they're going to go case by case, minute by minute, meeting by meeting, and they're going to go data dependent at some point in time after they make their first few rate hikes later this year. So that's really the CPI data is going to force the Fed's hand right now. I've got a Fox Business link, and take a look at our early morning wake-up call here on the West Coast, and it was a great opportunity, and I just appreciate everyone. Our clients, great support. I love the feedback as well. So take care, have a great day, and stay healthy and safe.